as always, the first thing to do before any trade is two things. Mark out the key level on the higher time frame, and then mark out the opening price, opening time and closing time of the candle you wish to trade. Right? In this case, and note the inversion of the key level, how it looks on the lower time frame. That is beautiful. Anyway, step one is marking the higher time frame key level. Marking the key level. Step two is marking the opening and closing time. Right? This is the first steps before placing a trade, right? So we have that done, right? Let's go back in the replay, because the second best way to study is through the bar replay button. The first best, of course, is live tape reading or live trading, and the third, the least efficient way is backtesting. Alright, let's go here. So we have price rallying, open, we go below the opening price, we have a turtle soup on the correlated asset, we have an SMT, and then we rally. Every single high of the week and low of the week has an SMT on the 1 hour time frame, right? So, opening price, decline, we burst up, and then we reach almost the key level, but before we tap into it, we are consolidating, right? And that is a common theme in price, which is you consolidate before hitting the key level, right? So it looks like the key level is not going to hit, and that is a common beginner mistake, which is seeing the consolidation before the key level and shorting there at once instead of doing the right thing and waiting for the key level to be hit. Right? You need to follow a rule-based approach, otherwise you will never make it. So we consolidate. Turtle soup pattern traders would be shorting right here. That is incorrect, and if you did that, then learn from the mistake. That's not how you trade turtle soup. Right? It's not a pattern, it's a logic. So we have Thursday, right? As we know, Monday, Tuesday, Wednesday usually mark the low of the week or high of the week. And Thursday, Friday marks the opposing end of the range, right? So usually you have a topping trade on Thursday and Friday, right? Thursday/Friday. If it tops on Thursday, then you have a continuation on Friday. And these are counter trend trades to what was going on the entire week, right? So we have almost reach a key level, the monthly 50% of the wick, chopping before the key level. Over here we have a kiss of death turtle soup right here. Right, that was a valid trade. And then we go and smack into the key level during the end of London session on Thursday. Now, what can possibly happen if you're smacking into a monthly key level at the end of London session on a Thursday? It is highly unlikely that we go much further, right? So that's what happened. This was all manipulation, right? you down in the time frames, otherwise you're gonna get lost. Right? So the opening time, right? This is the manipulation time. We go and smack into the key level, taking out a previous liquidity pool from the previous candle, right? And this was the entry, right? My entry was as soon as we wicked below this specific candle over here, this one over here, right? As soon as we showed weakness at this low, right? Then that was a sell right there, right? If you go in the lower time frame, you are probably going to see a market structure shift, right? So breaking a low on the 50-second, the 10-second time frame, the 5-second time frame, right? You'll see a market structure shift right there. A low, a high, a low, a higher high, and then you close below the low that broke the high, not this one over here, right? The low that broke the high, you close below it, showing weakness, and then of course never disrespecting this 5-second bearish order block. But that's noise. As long as you are showing signs of weakness, as in wicking below this candle, many wicks without rallying up at the end of London session. The confirmation for the sell is closing below this candle, right? Because as we know, wicking above lower prices, wicking below higher prices, closing above higher prices, closing below lower prices, right? So as soon as we closed below this, then a sell is valid, right? I entered over here. As soon as you wicked below this one, that was my entry, and you wait for it to chop and then explode to the downside, right? That is real accumulation, manipulation, and distribution, right? Not a pattern, a logic. Manipulation into a key level and then distribution after closing below that candle, remember? So it's not some random ambiguous method. This is a system. Now, with of course a good old kiss of that turtle soup down here. And of course, as expected, you got that. London creates the high of the day. That was my entry up here, as you saw. And New York gives the OTE of the day, and that was the high of the week. Right? Now, this video turned out a lot longer than I expected, but in summary, if there can be a summary for this, we're consolidating for a key level on a Wednesday. We hit the key level on Thursday, London session, and at the end of London session, we displace below an up close candle. Right? That is a valid sell. All within the parameters of following the higher time frame key levels. Right? So as you can see, when it comes to importance, I place importance first on the key level, on the higher time frame, and then the time, which is day of week, time of day, and then finally, after all that is confirmed, then I look for the order block, for example, or whatever, the market structure shift, whatever it is, right? The displacement, which shows which confirms your idea. That's all it is. So a mistake everyone makes is putting the priority on this, right? So they're all looking for this. They're all looking for an FVG, an OB, a breaker, but they forget 2 and 1, which are the key for 3 to succeed, right? So that's it. Once again is enough. Once again, you have the higher time frame key level. That's step 1. Mark it out. Number 2, time of day, day of week, week of month, etc. And after, if you don't confirm a valid higher time frame key level, then the idea is invalid. It's not high probability. If the time is not right, then it's not high probability. Right? So if 1 and 2 aren't in agreement, then 3 is irrelevant. 3, which is the